This was much more hawkish than we had expected. Will it finally calm the markets, especially the weakening of the real and inflation just surging?
Yes, that's right. That was bolder than expected. While some traders were really anticipating like a more aggressive tightening, that wasn't the consensus, and it showed the central bank is concerned about the real depreciation and the rising inflation expectations. We expect that to offer some relief for the real tomorrow, and also to help the swap rates curve to flatten, meaning short-end rates will likely rise to take into account that bolder tightening, while longer ends may drop because the central bank is now kind of ahead of the curve, and it's showing it plans to limit the increase in inflation expectations.
So as you say, they're now ahead of the curve. What do we expect next?
Yeah, so they already signaled 70 bips rate hike for the next meeting. That's more than the markets were pricing, so they will likely follow what the central bank signaled and put that in the curve. For the rest of the year, the curve is already pricing a very aggressive tightening that would take the basic rate to above 6% by the end of the year from 2.75% now. So we expect the monetary tightening to keep going on throughout the year. And officials will probably adjust the pace as we get changes on inflation expectations and the fiscal backdrop.
Commodities have really supported the Brazilian markets, especially with Vale as well having bigger than expected dividends. What's driving the equity markets?
Yeah, for the equities market, the larger rate hike is not great because, of course, it has an impact on economic growth and therefore on profitability. But also the fact that the central bank showed concern about inflation expectations may have a positive impact as well. So we'll see how it goes. As you said, higher commodity prices have supported some companies, but they also have increased inflation expectations. So you have that dual impact for Brazilian markets.